Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Monday morning pre-market webcast. Okay, we're looking at a daily chart of the E-mini S&P 500 futures. What you see here are a couple things. We've pulled back from our high here, 1985.75. On Friday, we came down to test the middle Bollinger Band, the 20-day simple moving average, made a low of 1968 even. We saw a little further weakness in the overnight. Now we're seeing a push back up above that middle band, which is now coming in at about 1969. This has always been a critical area for the bears. The bears have had no problem pulling a market back for a day, maybe even a day, 2 days. Where they struggle is when they get to key inflection points. In this case, the middle band. Their inability to convert key inflection points and turn them into downside momentum has been their downfall for over a year. That's how you end up with charts that look like this. The last time we saw it was the 17th and 18th of July, that Thursday into Thursday night, Friday, when we had the negative news, when the hostility started in Gaza, when the plane crashed, or the plane was shot down rather in the Ukraine. You saw a move down to 42.5, which was the lower band. The bears demonstrated no ability to get below the lower band. They allowed a bounce off of it, and like we've seen so many times, when they allow that first higher low on a smaller time frame to then become a set of higher lows, they tend to just get run right out of Dodge, and you end up with new highs, 85.75. So what are we going to see today? Are we going to see a solid bounce from the bulls that gets run up, essentially over the course of the day? Or are we going to see that higher low, potential higher low, then get turned into a lower low, so that you end up with a stair step down versus a stair step up? So you got a little bit of economic news today. You got pending home sales at 10. You have an FOMC meeting this week. It's a 2-day meeting. We get the announcement Wednesday at 2 o'clock, and then on Friday we've got the jobs report. So there are a ton of catalysts in the tape this week, which should tell us whether the bears are going to be able to turn this little pullback into something more, or whether we just have a fairly routine move down to the upper band. And if this goes to new highs, it can really run. There's danger here in trying to flip a coin here on the middle band and decide what it wants to do. The bands themselves, that's the two beige lines here, are extremely tight. The bandwidth is at 1.5. That is very similar to the bandwidth back in January, which produced this downside move. They are even tighter than here in May, which produced this upside move. Okay? You can do a lot of damage to your account trying to assume which way a band ride is going to go. Understand that when a band ride starts from bands that are this tight, you will have more than enough time to get in, and it will go much, much farther than you, or certainly people that will be talking in your ear, can anticipate. I mean, these things tend to go for 3, 4, 5 sessions. So like I said, plenty of time to get in, plenty of time to make money. You don't need to guess now in the middle. You're literally in the middle of this as to a direction. Just understand that you have to lean towards the bulls simply because you're in a massive uptrend, and they've demonstrated on a few different occasions the inability to follow through when we get to key inflection points. So I'll be very interested to see how we come out of the gate this morning. Get that, that morning dip that has worked so well in the last couple of weeks, and see if the bulls can take it all the way back up, or if the bears can break that morning low and then go ahead and push down into the 1960 area. All right, follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.